Now, one of the first things that I learned about after becoming a mom is that the government will actually help to contribute towards your children's education. $9,000 of free money towards your kids' education.
How come you've been going to the branch for so many years? You don't know what an RESP is. It's because they profit off people's ignorance.
Being there for her as a mom is also being there for her financially. And if I'm not there to provide financially, then what happens?
A lot of people they get very excited when they hear investments, and investments are sexy. You make an income, you have a child, you don't come home one night, that income goes away.
If someone does nothing after this conversation, what do they risk?
What the government of Canada has for your children when it comes to you planning for their education.
When I moved to Canada, I was very focused on my immigration paperwork, my job, stability, and growth. And survival meant paying the bills and maintaining my immigration status. But then I became a mom shortly after I became a Canadian citizen. And all of a sudden, my stability wasn't just about me anymore. And since then, I've had so many conversations with immigrant families. And what I'm finding out is that they either don't know these things exist, don't understand how they work, or they think that they have some time, so they don't really have to deal with that now. So today, as an immigrant mom in Canada, I am asking, what do I need to know now? And what do I need to do now that I am a parent in Canada? This is Mom-Versations, as told by Canadian immigrants, live from the Media Hub on riotradio.ca. I'm your host, Kristina McPherson, and today, joining me is Adrian Morrison, a fellow licensed financial provider who has worked closely with lots of families for the last 15 plus years. And today we're going to break this down in simple language. Adrian, thank you so much for being here. It's a pleasure.
It's a pleasure for me to be here. I appreciate you.
I appreciate you too. Now, just a quick disclaimer that this is for information purposes only. Nothing is to be taken as professional or personal advice. If you do want to get together with a financial professional after this conversation, there's going to be a link provided to you. So, Adrian, now, one of the first things that I learned about after becoming a mom in Canada, outside of my context, which was Jamaica,
Right.
is that the government will actually help to contribute towards your children's education. And since learning about that, I'm like, let's hop on that train. I think that it is one of the most underutilized tools in our community.
Right.
Do you agree?
I agree 100%.
Yeah. So for anybody who's watching or hearing this for the first time, or even if they've heard about this before, a reminder never hurts. What are we talking about when I say the government gives you money? The government helps to contribute to your children's education. What does that look like in real life?
All right. So what you're talking about is actually a program that was started in the 70s, about 1978. It's known as the Registered Education Savings Plan. I like to call it the Registered Education Investment Plan. Because you could actually hold investments in the account. It's an account, right?
Yeah.
It's a registered account. And what it's meant to create a long-term approach savings for your child's education, whether college, university, or apprenticeship school, whether inside or outside of the country. Now, for you to find out what the eligible institutions are, it's listed on Canada.ca website, the government website, right? So you could go to school inside and out of Canada.
Oh.
Now,
I like that you brought that up. Okay, continue. Sorry.
So I'm just going to give you a basic rundown of how the RESP plan works.
Okay.
Right? First, you got to open one.
Yeah.
Right. You have to. There has to be a subscriber, which is usually the parent, the custodial parent. Right. Could be the father too. Right.
Yes.
The custodial parent. Right. The primary caregiver. They have to have a SIN number, and the child has to have a SIN number.
Okay.
Right. And a bank account, because you're probably gonna contribute. So you could open the account at various different providers like banks, credit unions, mutual fund companies, insurance companies, right?
Yeah.
So what the government will do is, when you contribute, it's called a Canada Education Savings Grant.
Okay.
That's where you say the government has money for you,
Yes.
right? So when you contribute, they match you 20%.
Okay.
And there's another a set of money that the government will give you called a Canada Learning Bond.
Okay.
Now, not every family gets this.
Yeah.
It's
okay.
the eligibility is off your income.
Okay.
So there's a threshold of income. If you make above that, you don't get the bond.
Right.
So, and that you could get a maximum of $2,000. With the grants, a maximum of $7,200.
Okay. Right. So altogether, the government potentially has about $9,000 plus dollars for you and your kids,
right. Currently.
which could change over time.
Currently, yeah.
Yeah. Right. So that's $9,000 of free money, right, towards your kids' education. Right. And what you just said is a 20% match. So that's almost like it's a 20% guaranteed
gains on
growth
on
your money. But I love that you mentioned that the kids could go to school in Canada or outside of Canada.
Right.
I love that because even right now, I'm speaking with a family who's thinking about relocating and going back to their country. And what if their son, wants to go to school there or wherever? And so that's, I think, a very important point in conversation. Mm-hmm. Now, Adrian, for families who are thinking about when to start. Right? Mm-hmm. Because what I see happening here is that the government basically incentivizes you to start contributing from their little.
Right.
So that it compounds over time. But let's talk about the time factor.
So when to start, once you have a knowledge of this plan, you should start it right away. If you didn't start, you should have started from yesterday. But let's talk about why you should start as early as you can. Yeah. One, it's to max out on the money that the government has to for Canadian children or for children that are residents in Canada, right? Another thing is the time value of money. Mm-hmm. Money takes time to grow if you're going to invest it, right? So if you're looking at a long-term approach, money grows over time. So the more time horizon you have, right, the better your money compounds over time.
Yeah. Right. So hint. And I like that based on the fact that the government helps to match 20% up to a maximum each year, is that they're developing or helping a person to develop the habit of putting money aside specifically for your children's education.
Right.
Time, just over time. Mm-hmm. And so, but here's the but.
What's
right?
the but?
A lot of the families that I've spoken to, right? There's a couple of objections, right?
Right.
And I mean, I've interviewed a couple parents, just personally, like, hey, do you have this for your kids? One in particular that I hear quite often is, what if they don't want to go to school, right? What if the world changes, AI takes over, school is no longer a thing? What if they don't go to school? What happens to that money?
All right, here's the thing. So there's potentially three types of buckets in that plan.
Okay.
I call them buckets, right? Money going into that plan. One is your contribution. Two is the grant.
Okay.
Three is the bond, right? All of these are going to be invested, right? If you're working with a professional, right? Now, there's going to be some growth on these different buckets. Your contribution that you put in the plan, like Kristina has a RESP for her daughter.
Yes.
She puts money in the plan. She contributes on a regular basis, however much, $100, $200. That contribution comes back to you tax-free if your daughter doesn't decide to go to school.
Right.
It's a tax-free.
It's your money.
Money coming back to you. What's going to be taxed, though, is the growth on that money.
Okay.
So if there was any growth, for example, you put $10,000 in there and there was gains on it because you made some interest on it.
Yeah.
$5,000.
Right.
That will be taxed.
Right. But it's not gonna be 100% tax.
No. But here's the thing though. There's rules where you could and you gotta be eligible for these under these rules.
Yeah.
Where you could transfer that amount into your RRSP.
Okay.
Right? Or you could move it into a RDSP if eligible.
Right. Okay.
But
so
your contributions, tax-free, comes back in your hand.
Right. Which to me sounds the same as, say, for instance, a family says, you know what if they don't go to school? Let's just keep it over here in a savings account and it never, ever grows. Or it grows at 0.75%, right? Versus if you put it in and they don't go to school, it's the same as if you didn't put it in, basically, because you're getting your money back
Right.
the way you put it in, plus you're getting probably more than 0.75%, because there will be growth. It's just you paying a little bit of tax on the growth.
Right.
And so that objection, if I can help anybody to resolve, if you have that objection right now, or if that's something that you were thinking about, can you drop it in the comment section below saying, this is what I was thinking too, but maybe I'll think about it differently. I don't know. Or maybe if you're still stuck on that, because it sounds like it's a gamble. Yes, maybe the child may not go to school, but if you have more than one children, we can talk about that. So let's talk about like if the family has more than one children and or they have 4. This is a very specific example. I'm talking to you. 4 kids and only one decides to go to school, but there's a pool of money that the government contributed for each of the kids.
Yeah, they could have access to the grants that the other children that didn't decide to go to school, they could use that. But I wanted to add also, if the child or children don't decide to go to school, I just want to add the government piece, the grants, the bonds, go back to the government.
Right.
So
Right.
So the money is still usable if and that would be, you'd have to have a family RSP for that to happen, where
Right.
Other child could use the grants, right?
Right.
You could, if it's an individual RSP, it's not going to work.
Right.
So you have to open a family RSP where you could have more than one children on
Inside
one,
of it.
on the one plan. Yeah.
Okay. And this is something that you would, work with a licensed financial provider like myself or Adrian to be able to decide what is right for you and your family. But the point is that there are options and your money is not stuck and gone forever if your children decide not to go to school. And I think that that's one of the biggest misconceptions and also the biggest reasons why families are not taking advantage of this. Free money is the word that just comes to mind, but basically they are helping you to invest in your kids. Why not take it?
Well, Kristina, my niece right now, she's in college for nursing.
Yeah.
She actually wants to be a vet.
Okay.
And I set this up for a long time ago for her because her mom didn't know about it either. But when I got in the industry, I had the knowledge and of all these different solutions, and we put it together for her, and that's what she's been using to pay for her college education right now. She goes to Humber, studying nursing. She'll be finished soon, right?
I love that you brought that up, actually, because I did interview some students here on campus at Durham College. Did your parents have an RESP for you? And of the 4, 1 had an RESP. Of the 4, 3 had an RESP, 1 didn't, because their parents didn't know about it. And I asked, well, would it have been helpful right now to just have some money to go to school? Yes, it always comes in handy, having some money. And there's something that you said at the very beginning, that it is called an RESP, Registered Education Savings Plan, but you like to say Registered Education Investment Plan.
Yeah, because you could actually invest in it.
Right. So I actually want to stick a pin right there to talk about the difference between savings and investing in simple terms.
Okay, so savings, it's kind of, well, there's a difference in the investment industry or in the financial industry, right?
Right.
Many people don't see the difference, but the savings is usually used for like short-term approach to your finances. For example, an emergency fund. You're probably saving for like a goal that would you need to accomplish in a year, 1 to 3 years, right? So you usually put that money into like a high-interest savings account or something like that.
Right.
Right. Then there's investing where, you could take advantage of an asset that would appreciate. It could be the capital markets, could be real estate, it could be a business, right? You could invest in a bunch of different things.
Right.
I'm licensed to speak on the capital markets, which is the stock market, right?
Right. And so the basis of it is that your money will grow within an investment.
So,
and not sit stagnant.
Right. So in an investment, you get to partake in like, for example, you have different type of investments like mutual funds, seg funds, ETFs. There's a bunch of different, right? And you get to partake in the returns from those type of investments, which is pretty much significantly different from how a high interest account work, right? So, but I don't want to get into all of that. I just want to, that you could invest in that account. Right?
Yeah. Yes. And I like that differentiation right there. Investments versus savings. And just, we're planting that seed to give you guys the language that you might have already, but just a reminder of that there are options available for parents, for moms, for dads, for families to help to invest in their kids. Now, how much money does a person need to start? I think sometimes when you think about investing, sometimes people think of a threshold like, oh, I need to have X amount of money before I can start, X amount of money before I can open an account. Can you help debunk that?
All right. So flexibility is key in these accounts too, because I've had parents start with $25, $50, right, until they could increase their contributions or decrease them, right? Okay. $25 is the minimum. But people tend to wonder, where's the money going to come from?
Yep.
Right? So, you get the Canada Child Benefit. That's one way you could take a piece of that and start contributing to your child's education. Or there's other strategies, if you get a tax refund, right? Every year you could use a piece of that also, right? So there's many ways you could contribute. You just have to sit with a professional and let them look at the whole picture and find out where the money is.
Where it is, exactly, because it's there, right? It's there. It's a matter of where is it going to come from. And I like that you bring that up. So the Canada Child Benefit is a tax incentive, tax credit, simply for having kids. Simply for having a child in Canada. And so that money comes to you very religiously every month on about the 19th or the 20th. And then you can probably, like you said, take a piece of that pie, devote it, dedicate it. It's kids. So you get it and that piece is gone over into an education savings account. And
Kristina, once you set it, you could just set it and forget it.
Yeah.
Right? So example, $50 leave your account and go to the RDSP every month.
Yes.
Right? So you don't have to think about it.
Exactly. And you know that you're working towards something for the future, that you probably have some time. In fact, I was talking to a parent just before coming live here today. And I was like, he didn't have an RESP.
Right.
And never thought it was valuable. And then I spoke to him about it, gave him a little bit of a different perspective, and he changed his mind. And he said one of the things that he can take comfort in right now is that is a dedicated account towards his child's education. He can set it and forget it and set up automatic payments towards it. And we just know that account is being built.
Right.
And so for peace of mind and for not having to worry about that, but also I think the guardrails around an RESP help to protect that money for what it is intended for. So if there's an emergency, that's not an option, right? Not that the money is stuck in there. We're not going to scare anybody away, but we're just saying, like, if it's dedicated for that, let it be for that. Now, you mentioned something earlier. I want to kind of camp there for a little bit, because preparing for somebody's education or children's education is piece of the puzzle in terms of children's future. And, different children have different needs. And so there are children that may have disabilities.
Right.
And so they also have what's called an RDSP, or just a disability savings plan or investment plan, since we have that language now. And a lot of families don't even know this exists. And not only not know if it exists, but who is eligible. And we're not going to go through a long checklist of who is eligible from who is not. But sometimes when we think disability, we think about physical disability. We're not necessarily thinking about autism, neurodivergent kids. We're not thinking about mental health conditions. So can you tell me a little bit about the RDSP and who it might be designed for?
Right. So it's the Registered Disability Savings Plan.
Yeah.
Right. You could invest in it also. It could hold investments.
Right.
It came about in about 2008.
Okay.
Right. And it's geared towards savings for Canadian residents, children with a disability. Now, to qualify that you have a disability, a medical practitioner have to deem you disabled, whether mentally, physically, right, whatever disability he. And then you would have to get qualified for the disability tax credit. So the first process is for a medical practitioner to say, okay, you have a disability. Then he fills out the disability tax credit form for you, and it's sent to the government. You could actually do it digital now. And then you could open a RDSP. Same thing, you need a SIN number, right? If the child is underage, meaning that below 18 years old, right? The guardian or parent or whoever the guardian is has to open it.
Right.
If you're above 18,
right,
and whatever age of consent is in the province,
right,
you could open it yourself, right?
Actually, thank you for that differentiator, because it's not just for kids. RDSPs.
No, it's
right. Disability.
You could receive. It's sort of the same idea as the RESP, because you get grants and bonds also paid into it. The grants are paid into it and the bonds are paid into it until you're 49 years old. But you could actually have the plan, open a plan beyond 49 years old. But then it would even make no sense, because the grants...
You're not getting the grants.
It would make sense if you need like another...
additional room.
...vehicle to invest money in, right? You start to collect income from it, at the very least, age 60. Or maximum age 60.
Okay.
You could actually take it before that, but by age 60, you need to deaccumulate the account. Right? Grants and bonds, you can get a maximum of about 70K in grants. Right? So the government will actually match your contributions 3-to-1, 2-to-1, 1-to-1, depending on your income threshold.
Okay.
Right? And then there's another 20K in the bond. So a maximum of about $90,000.
Wow.
And they will retroactively go back 10 years.
Okay.
And pay you bonds and such if you qualify for it.
Right. So if somebody who has been living with a disability didn't know about it and they said, all right, let me go now, they can get the back pay.
10 years they'll go back.
Very helpful.
So is it with the RESP also. So like, let's say you have in the bonds, they could pay it retroactively in the RESP also.
Yeah. Wow. Okay. And, that I'm having this conversation or this Mom-Versation on behalf of moms, families, parents, immigrant parents who didn't know, because we spoke about timing a little bit earlier, and timing matters for when you start and when you put money in and all that stuff. And in my interviews here with a couple of the Durham College students, or conversations with the Durham College students, is that, okay, one had no RESP. The others had RESPs. However, it served them 1 year of college and didn't serve them the entire amount. And this is where sitting with a licensed professional, someone who can help you to do the math, to help you to actually, how much do you actually even need? And that's where the timing comes in too, because it's hard to fathom getting to 120K or something, one drop, versus getting there over time. And so that's where the timing matters.
Let's speak on it, because having a RESP is just a product.
Yeah.
Right? Now, the product can lead to a solution if there's a plan behind it.
Yeah.
So the plan is, hey, I need 60,000 to go to college and university in the future, adjusted to inflation, right? What do I need to do that? And that's where the planning comes. But the RSP alone, it's just a product.
Yeah.
For it to become a solution, you need a plan behind it. That's where you sit with a professional and they design the plan for you.
Perfect. And that's why these conversations matter. Now you know, through awareness. But also in one of our upcoming episodes, we will be speaking to a mom who has a child who is raising a neurodivergent child. And I mean, she's just one of the few in our community who are raising neurodivergent children, where our RDSPs become probably relevant. Not confirming your eligibility, but something to check out. And also thinking about RESPs. Now, Adrian, a lot of the times when I sit with families or individuals, yes, we want to get the money from the government. We want to invest it. We want the money to grow. We want to have a lot of money for them, for ourselves, to be able to afford our lives. However, I think that protecting that future is equally as important. Now, I did not have life insurance before I was about to have my daughter. Now, I had a baby in COVID. I shared that in episode 1, that during COVID, death was a lot more, talked about. And so before I went to the hospital, is when I got life insurance, like probably 2 months before I had her. Because before that, I was okay with it. I feel like I would have been covered. You know what I mean?
So my question to you is, why did you decide to get it then?
I decided to get it because then I was thinking, well, what happens to her if something happens to me?
Right.
Part of being there for her as a mom is also being there for her financially. And if I'm not there to provide financially, then what happens? And that's like I have seen friends who have lost parents, and it's hard. It's hard. And so I wanted to make sure I took care of her future, whether I was here or not, even before I met her, God forbid. Thank God it worked out. But that's why.
Okay. All right. So let's speak on it. So and this is the truth.
Okay.
The first line of your finances, or the foundation of your finances, should always be protection first. Yeah? Why? Because, all right, let's say, right, a lot of people they get very excited when they hear investments, and investments are sexy, right?
Yeah. I agree.
But think of your financial life like a soccer game or a basketball game or any type of sport you watch. There's always offense and defense. Right? A team doesn't operate on just offense.
Yeah.
Being offensive is the investment piece.
Yeah.
People love that.
Yeah.
But where's the defense? So let's speak on it. Defense is you protecting your income,
Yeah.
your ability to make an income, right? Your human capital, right? So you make an income, you have a child, you don't come home one night, that income goes away. It's as simple as it is. Now, let's think about it. You know, you make whatever your income is, it goes away, right? Now, you're doing all this investing, right? And let's say you started 5 years ago and you amass, a certain amount of money, whatever that looks like. I'm here to tell you, whatever that amount of money is, possibly it won't take care of your family, not even for a year. Right? So the first, the foundation of any plan financially is to protect your income first, right? And then, we're talking about life insurance.
Yeah.
It's a solution.
Yeah.
It's a solution. One application is if you don't come home one night, your family is not going to be impoverished.
Yeah.
The child's education is going to be paid off.
Yeah.
There's going to be money there, and there's going to be income there. Potentially, or you could customize a plan, right? Until they're independent, or until whatever that looks like for you.
Yeah.
Right. Most of the time is until they're independent, meaning finish school and university, and they're having a job now. So life insurance could do that for any family out there. But a lot of people, like how they think, they have to have a ton of money to invest. They think it's a ton of money to own a policy that could, protect your family.
Yes. I like that you brought that up, actually, because that is one of the I guess, common misconceptions, and one of the reasons why families are shying away from it. Part of it also is cultural.
Right.
And that's probably why I didn't have it before I had her, is one of the reasons I got it finally, is because somebody spoke to me about it. Not because I went searching for it, right? Somebody spoke to me about it. I'm like, oh, this makes sense, But culturally, coming from the Caribbean or some other country, maybe some African countries as well, it's not common nature. It's not first nature. We don't think about that.
That's true. It's true. Caribbean, from different parts of the world, it's not a conversation that people have, right? So, but here in North America, it's a conversation you need to have.
Yeah. And honestly, no matter where you are, I think it's a conversation that needs to be had, because it's not like dying here is different from dying somewhere else.
Not.
It's not. And I think that it's kind of a mindset shift to not be okay with the status quo, which is well, your family just has to find money for you and the kids just have to figure it out. Your family just has to help your kids to figure it out. If there's family left behind, you would hope. But I think that there is a mindset shift that it doesn't have to be a GoFundMe. It doesn't have to be a case where, you know, your relatives are having to figure out how your kids are going to go to school. Or maybe sometimes kids end up not going to school because that wasn't there. And it doesn't need to be that way.
No.
Yeah. Yeah. So it's avoidable.
It could be devastating if somebody, you know, had an unexpected death, died prematurely, and they didn't achieve financial freedom at that time.
Yeah.
It could be devastating for that family. I've seen it. Right?
Same.
Yeah.
Same. And another thing that I kind of learned about too, and this is all starting my motherhood journey 5 years ago, almost 6, geez. Critical illness.
Right.
I never really thought about that. Right? Last year, I had to support one of my family members who was going through cancer treatment. And there was no critical illness insurance, let me tell you that. Let's talk about critical illness.
All right. So that's just, you know, protecting your income or your ability to go make an income if you get a catastrophic illness. For example, you have the 3 big ones in Canada: cancer, heart disease, and stroke. They say between 5 people in Canada will have some sort of cancer. That's Cancer Society stats.
Oh, okay.
Right?
2 in 5.
2 in 5. So there's plans out there that you could put in place to actually, you know, mitigate against that risk if it should appear in your life.
Yeah.
Because, you know, truth be told, you're going to need money. That's if you get one of those illnesses, you have plans that cover at least 25 illnesses.
Yeah.
Right? So I think that's a necessity also.
Yes.
Yeah.
And when I think about it, I think beyond just for myself. Because yes, if I develop something, then I would want to be able to financially afford to get better.
Right.
But also, I find that this is something that is unknown, and it was not really known to me, to think about covering your kids.
Right.
Like having critical illness for my daughter. And some families don't know that depending on the insurer, sometimes autism is considered a critical illness.
It is. I'm going to tell you a story, actually.
Oh, tell me all about it.
So I met this mom, right? She's from Uganda. And when I met her, she had a policy in place. I did a review and I found out that wasn't the right fit for her. It wasn't suitable for her.
Okay.
So we redid our plan. And at the time, her plan didn't have child critical illness on it.
Okay.
She had a son that had autism, right? And the other one never had it.
Okay.
Right? She had 2 sons.
Okay.
But me being the professional that I am, like when I put together plans, I put it together with the intention it's gonna pay out tomorrow.
Yeah.
Right?
Yeah.
So I added that extra protection for her, which is a child critical illness rider, to her life insurance plan.
Right.
A year after, the other child developed autism. And she claimed on it, she got paid. She was very happy, right? And that's just one story. So you could actually add those things to your plan.
Yeah.
Where your child is already covered. Because truth be known, there's a hospital called Sick Kids, right? It's not animals that go down there. my nephew was down there, right? So, you know, you could add that to your plan.
Yeah, yeah. And it comes in handy with providing financially for you and your kids and your family when something like that happens. And so I think this is something that is also underutilized or people don't sign up. They don't join the line, and nobody's joining the line to die, of course, or develop a critical illness. It is one thing that is sure in life is death and taxes. And so I feel like regardless of where you are, who you are, the time, it's something to think about, consider, so that your kids have some degree of a legacy to pick up on if you don't come home one day. People often think about age and timing. like they'll insure themselves. And this is conversation I'm having with moms as well. Like, okay, if you want to get a policy for yourself, yes, you can add your child to it for their life as well.
Right.
Nobody ever wants to have that conversation or think about that thing, but that's another thing to consider. But they're like, oh, but they're young and they're healthy, or I'm young and I'm healthy. Let's talk about why age or timing doesn't, or health doesn't matter.
Well, there's two ways you could insure your child. It's not because you think they're gonna die or anything like that. The main reason why families do it is just to lock in on that cost of insurance, which is pretty much very, very cost efficient at that age, right? Instead of them doing it in the future. And then it doesn't have to be a rider. You could give them their own individual policy, right? Which I tell people it's like buying them a house. If you're buying like a permanent insurance, which I like to call tax-exempt insurance. So it's like a wealth transfer strategy.
Yeah.
Right? That's something that you would have to sit with a professional. They show you the strategy. So it's like when you buy a child life insurance, especially the tax-exempt permanent life insurance, it's like buying them a house, right? And it's a tax-free transfer to them when you're ready to transfer it. So the parent would be the owner, the child would be the life insured. At any point when the child reaches 18 or above 18, you could transfer that tax-free to the child. And as I said, it's like buying them a house because these plans build equity in them also, right? So there's money growing in them, in the plans.
Right.
But basically, the reason why someone would insure a child is just to lock in on that cheap cost of insurance, right? That 5, 6, 7, 8, even on newborn. 3-year-old, 3-year-old.
Yeah.
Right.
Right. Because it's that much cheaper when you're younger and healthier.
Right. And as I said, they take advantage of the equity that builds in there also, because that could be used for anything.
Yeah.
Their purchase to their first home, down payment, car, whatever. Right.
Yeah.
There's no stipulation on what you could use the investment component in that plan for.
Got it. Now, we've talked about quite a number of things on here. We've spoken about the education stuff, the tax stuff, RDSPs, lots of Ps, and moms, we're busy.
Right.
We are busy people, okay? We have all kind of things to think about, all kind of things to do. And chances are you think like, okay, now I know about all these things, now I have to go and figure it out and find out. So if a parent right now feels a little bit overwhelmed, not necessarily with the information, hopefully not anyways, but overwhelmed with life.
Right.
What's one simple step, first step?
Well, you don't have to be overwhelmed. You could put that overwhelmness on somebody else who's a professional that could handle that for you.
Yeah.
Right. So there's a ton of them out there. Right. I'm one. You're one. Right. They could reach out to me. They could reach out to you. Right. My services would be complementary in guiding them where they need to go, right? And I love working with immigrant families coming into Canada because, one, they're the most deceived. They're the most deceived. People profit off of people's ignorance, unfortunately. But, I'm very passionate and purposeful about guiding people in the right direction, right?
And that's why I'm having this conversation with you. Because like me, passionate, have a passion for the immigrant population. And the reason why I do what I do is because there is so much fraud within the institution that is immigration. From all kind of angles, right? Not just in terms of talking about money, but it is predatory, pretty predatory.
Oh, yes, it is.
And I step in as the superhero, the superhero mom, big sister, because I am that audience, right? And I'm not going to say I was deceived necessarily in coming here. However, I did not have I was not given all of the information. I did not have the full story.
Well, here's how deception happen. People don't literally deceive you. They just don't give you the information.
Yeah.
which is
elimination,
which is which is to me is deception, right?
Yes.
Because if you have it, why are you not sharing it?
Yeah.
Right. And the point of everybody contact when it comes to their finances is usually they walk into a branch, a bank branch.
Yeah.
Right. How come you've been going to the branch for so many years? Right. You don't know what an RESP is. You don't know what a TFSA is or how it works. Or you don't know what is the rule of 72, which is the banker's rule. And I didn't teach it to you.
Yeah.
How does that happen? It's because I have the information, but I'm not going to share it with you. Because if I share it with you, I'm going to empower you. And for me to profit, right, I profit off people's, not me, but speaking about institutions.
Let's use
they, right? They profit off people's ignorance.
Yeah.
Right? So that's how some of the industries work. And that's just the truth.
Yeah, and that's the world, unfortunately. And so there are good people that enter the space to try and help to empower people with information so that you can make informed decisions. And that's what this is. This whole series, Mom-Versations, we're going to have different kind of conversations. This was the money talk, right? So we're going to have, we're speaking to parents with neurodivergent kids, moms who have experienced loss, all ranges of the spectrum. If I could list out all the guests on here, entrepreneur moms, entrepreneurs.
Right.
And so the goal is to empower you with information so you can make informed decisions. That at any point in time, there's going to be a link in the description. It might pop up on screen also to be able to book a complimentary call with Adrian to be able to have this conversation to see what is right for you and your family. So don't let that opportunity pass. At least get the information knowing. When I was talking to the Durham College student earlier, his parents didn't know. His parents were immigrants, right? Didn't know that the RSP thing was a thing, and it would have helped. It would have helped him. So at least try to set things up for your kids as best you can.
And I don't know this person very well, but I'm pretty sure their parents went to some type of financial institution in Canada.
Probably.
And it was never told to them.
Probably.
See?
Probably. And like many of the people that I've spoken to, actually, that is a lot of the moms I've spoken to don't have RESPs for your kids. So this is your sign. And
I just wanted to add, just for more information for your audience, if you qualify for the bond, you actually don't have, it's the government will put their piece in there when it comes to the bond.
Yeah.
So the first piece they'll put in there is $500, and then every year $100 after that. So what am I saying? I'm saying if you qualify for the bond, you don't really have to set up contributions right away until you can. Right? Because money will go in there regardless of you contribute or not if you qualify for the bond.
If you qualify for the bond.
The grant now is what attracts the
They'll match.
20% from the government. But the bond, regardless of you put money in there or not, the government is going to put money in there.
And it's going to grow.
It's going to grow.
It's going to grow.
So I was speaking to a grandma yesterday, and grandmothers could open it too. All right?
Okay.
It's not just limited to the mom.
Right.
But the mom has to sign off on it.
Okay.
A custodial parent.
Right.
If it's the mom or the dad.
Got it.
So I was speaking to her yesterday, and she has her grandson now is 6, and she just had another one that's 6 years old. And I was telling her, she's been my client for a while, right? And I was telling her that, but she can't get it open because of something with her daughter-in-law, right? They don't get along. But I was telling her, like, your grandson right now is missing in bonds, right? Because $500 and every year, 6. So about, what, 6 and 5, $1,100 he has out there. And his mom will qualify for the bonds because I did the income check with her. But she just lazy to open it, or I don't know why she didn't open it or not.
And I like that you mentioned, if lazy is the thing, it's probably overwhelmed, right? And probably limited information. And this is where, if you talk to a professional, once they have the information and your authorization, we can help get these things in place so that it's not just on you, it's not reliant on you solely to get that done.
Yeah, the grandma wanted to open it, but all she had to do was sign off on it. But I don't know what's going on with them.
Okay.
Yeah.
Okay. Well, drama. Okay. Well, for the sake of your children, I would hope that this information will inspire you to think a little bit differently. Coming to Canada, we came here for options. We came here for a different kind of life that we didn't probably see feasible where we were, per se. And so there are options here, there are incentives here, there are things here that you can take advantage of, and I encourage you to try and take advantage of them. And take advantage not in a bad way, like capitalize on the thing that is there for you. The money is there for you, it's just waiting to be paid out to you. Now, if someone does nothing after this conversation, Adrian, what do they risk?
Well, one, they risk acquiring more knowledge, which is, if you use it, it'll empower you. You'll walk in wisdom. But you're missing out on what the government of Canada has for your children when it comes to you planning for their education on a long-term basis. Because, imagine, your child reach 18 and they have to go take out OSAP. And now you're looking back and say, hey, you know what? I could have set up an RESP, I heard, but I just never did it. When you get information, the next step is to look deeper into it, look if it's true, and how you could, capitalize on opportunities like this, right? Because it's a program that's designed for your children to use to go to college or university or apprenticeship school, right? And I personally, this is my personal belief, that every children in Canada should have one.
Yep.
Whether they go to school or not.
Yeah.
Because there's options for you to get back your money. That's not the issue. The issue is capitalize on the opportunities that are out there that the government has for your children.
Yes.
Not too many countries offer these things,
Nope.
You can't get these. I don't know about America, right? But I know that not too many countries offer these things.
Yes, I agree.
Where I'm from, that's not there.
Yeah. Agreed.
You agree?
I agree.
All right.
Today was the money talk. It's about family, it's about responsibility, and we talked about education savings plans and how the government actually incentivizes starting to contribute from them little. We talked about more than just savings, it's protecting that plan, because building wealth isn't just about growing the wealth, it's offense and the defense. How if that life isn't protected, then that wealth could vanish in a second. And none of this needs to be done all at once. You don't have to eat it all at once. How do you eat an elephant? One bite at a time. Talk to a professional. It's about knowing what exists and making intentional decisions, like booking a call with Adrian, using the QR code on the screen and or the link that is in the description below to get a complimentary call to get an assessment to see what is right for you and your family. At minimum, just know.
And even if you have set up an RESP already and you're watching this podcast, we could also give you a second opinion on what you have to make sure your money is working for you and not against you.
Yes.
Because I've seen many RESPs with not doing anything.
Yeah.
The money is just sitting there.
Yes.
Right? There's no growth on it. It's just sitting there.
And compounding interest works best with time. So, and you have time. Your kids are young, I think, right? Well. Adrian, you have been an amazing guest. I appreciate you for being here for sure. Lots of wealth, lots of knowledge, and that's it for the most part.
I appreciate you having me.
Absolutely.
Right. Anytime.
Absolutely.
Anytime.
That's it for episode 2 of Mom-Versations. I look forward to seeing you back here next week, where we're going to talk about supporting parents who may be abroad while you are here in Canada with your child and being torn between the two, and how do you balance that dynamic? Please don't forget that you can follow the Media Hub on social media at DCSA Media Hub. You can also follow us on As Told by Canadian Immigrants on every platform: LinkedIn, YouTube, Instagram, Facebook. The TikTok, I think, is As Told by Experience, but if you go to our website, astoldbycanadianimmigrants.com, you'll find that is a central hub to everywhere that we do. Thank you again for joining us today. If this episode was helpful, can you hit that like button and share it with one other immigrant today? This was Mom-Versations, as told by Canadian immigrants, live from the Media Hub on riotradio.ca.